you are a global research leader, banking and financial markets at IBM Institute for Business Value, quantitative risk management and investment banking to becoming like this IBM's global thought leader and research leader.
First 15 years of my career from the late 90s, I was building risk management models and architectures for investment banking. So I was head of quantitative risk management, entrepreneurship. Okay, so working for a bank, trying to transform from the inside new processes, new ways of understanding the business. Funded a startup, a fintech in Germany, 2008. So I became more entrepreneurial. The most complex thing that we have in banking today is really the understanding of how the foundations have to be changed to be really successful at the end of the journey.
What drew you to the research and storytelling side of the business?
I use the word storytelling. Research and storytelling are a bit different. Technology is not easy. Business transformation is not easy. You need to be capable of conveying a message in simple terms. Whatever you say, perfect or imperfect in the way you position it. Try to be an authentic voice, an authentic person. I've been writing 6 successful books. And when you write books, not just research, you really think in terms of how you convey the message with personal experiences, with good stories.
Here is a lot of AI entrepreneurs, founders, VCs who invest in the AI space. One of the research you did, I think your research showed that 78% of financial institutions are already implementing generative AI. What is actually in production scale in AI at the enterprises? And the answer mostly is very few. What is your take on it?
70% of the banks were very tactical in their approach to AI, so they were working on it but very tactically, while 8% were very strategic or more strategic, and the remaining 40% said, I don't want to use AI at all. Now, what is the difference between strategic and tactical?
Yeah, amazing. No, that's really insightful. AI Venture Builder, we are very hyper verticalized AI solutions, especially in financial services, looking at insurance claims process, small business lending, wealth management, RIA space. So similar to this, like what are you seeing in the banking financial services in terms of the use cases?
It's changing, and there are 3 dimensions to it. One. First, most of the banks look primarily inward in the application of AI. We see how AI, as it became more flexible, opened up new opportunities.
Basically, the Uber CTO actually said that we have burned all our tokens in the first few months. The whole budget has been burned out. And when you go to this, like this is still enterprises, when you go to small and medium businesses, they are actually not thinking about token maxing or anything. They are actually thinking about if I have 4 people, I'm going to replace them with AI. Does the AI cost lesser or more?
Build AI, push the limit. Conversations with no gimmick. Tech and juice collide in sync. That you're on, don't stop to think.
Hi, Paolo. Really good to have you. And for the audience, I have known Paolo for maybe like 10 years now. Both of us were very early in the fintech space, and I've really enjoyed my conversations and time with Paolo. And we have met like in different parts of the world at different fintech conferences. So it's so good to be talking to you.
We remain the same young, I can say.
Right. So, Paulo, I think we'll start with a little bit of background. For the audience, you are a global research leader, banking and financial markets at IBM Institute for Business Value. And would you like to tell us a little bit more about like, your path, from quantitative risk management and investment banking to becoming like this IBM's global thought leader and research leader?
Always been very entrepreneurial or intrapreneurial, depends on how you position it. So the first 15 years of my career from the late 90s, I was building risk management models and architectures for investment banking. So I was head of quantitative risk management. And then I became that entrepreneurship. Okay, so working for a bank, trying to transform from the inside new processes, new ways of understanding the business. And then I funded a startup, a fintech in Germany in 2008. So I became more entrepreneurial out there, had some partners. And that was bought by IBM in 2013. So ever since I've been working in IBM, I've been working on the thought leadership piece. And now I'm the global research leader for banking and financial markets at the IBM Institute for Business Value, which is our research center where we attempt to connect the dots worldwide between business and technology. And that means being an entrepreneur of ideas, if you like, right? Because even creating a good point of view, a substantiated perspective requires, quite of an ingenious activity because you look for the data, you look for the conversations, and that's what I do. And so, on top of what I do today, I'm also author of literature, business literatures, and beyond that, that wants to move our understanding of the industry beyond the current buzz, out of the noise, to be very substantiated. And I'm also the host of the Banker's Bookshelf, which is a successful podcast where I invite authors of the most interesting.
Right. And just for the audience, like Paolo and I are across the Atlantic today. Paolo is joining in from Milan. Although he's a globetrotter, like I have seen him in different parts of the world, and I am actually calling from the West Coast. Yeah, it's great to be talking across the pond. And Paolo, again, I wanted to sort of ask you a little bit about what drew you to the research and storytelling side, of the business.
I'm sure I use the word storytelling because research and storytelling are a bit different. Of course, you need to be capable of conveying a message in simple terms, though sometimes messages are engaging because they talk about very complex topics. Technology is not easy. Business transformation is not easy. I think that the first and foremost important thing is to be authentic. Whatever you say, perfect or imperfect in the way you position it, try to be an authentic voice, an authentic person. And I hope I'm making that happen. Also, in my role of IBM is really an independent perspective. I'm tasked to talk about the industry. IBM is there on the cover of my research papers, but inside is really an industry conversation, right? So we are trying to understand, what happens or what might happen in the future. Second, I've been writing six successful books, or at least five very successful. The sixth one will be launched in a few days, and I believe will be successful as the others. Amazon bestseller in banking books as well. And when you write books, not just research, you really think in terms of how you convey the message with personal experiences, with good stories that allow people to grasp the meaning of complex concepts, building framework like my banking innovation quadrant. And so that is the way I've been shaping my engagement with the audience, which can be specialized or maybe a bit less specialized. So that is the characteristic, if I can say,
Right.
about that. And last but not least, the most complex thing that we have in banking today is really the understanding of how the foundations have to be changed to be really successful at the end of the journey. And I think not many people discuss that, but I definitely do. I believe that the major problem of the fintech industry and banks with is that many attempt to change the way electricity is produced using a nuclear plant instead of a carbon plant. Now, if you want to do that, you need to change the theory underneath. You need a new physics for that. And in banking is the same. You cannot discuss AI first or digital banking assuming that the way the economic model works is tied to the theory that represents banking services of the past. So you need to change the underlying assumptions. And one of the special things I do compared to other voices is that I try to make that connection clear because in the end, it's the business connection that allows technology to scale for good with satisfaction on both sides, the banker, the fintech entrepreneurs, or the client. Without that, problems arise here and there, and that's not good.
Right. Very well said. And we will come back to your new book and talk about it a little bit. But first, I want to talk about, the audience here is a lot of AI entrepreneurs, founders, VCs who invest in the AI space. And I think your research and IBM hat on, I wanted to like touch upon one of the research you did. I think your research showed that 78% of financial institutions are already implementing generative AI in at least one use case. And there's a lot of debate, like in San Francisco Bay Area, about what is actually, in production scale in AI at the enterprises. And the answer mostly is very few, right? So, what is your take on it? Like, is it mostly currently pilots and, one or two use cases, five use cases, or you are seeing big production level AI?
is a mix. Let's go back to the data point first of all to qualify it properly. So a couple of years back, where we started looking at the generative AI transformation, we saw that 70% of the banks were very tactical in their approach to AI. So they were working on it, but very tactically, while 8% were very strategic or more strategic, and the remaining 14% said, I don't want to use AI at all. Right? Now, what is the difference between strategic and tactical? Tactical means there's some money in retail banking, I start there. There's some ambition in corporate banking, I start there, but it's not a deliberate approach that wants to deploy AI across the organization. And lack of deliberation here is a big constraint because use cases don't scale within that use case. You need to have made investments in the proper architecture and infrastructure that allows you to accommodate a lot of these things, where you factor into a common denominator activities that go around the governance or other aspects, which can be very cumbersome to be implemented. It requires big expertise to be built that needs to resonate across the organization, not be confined into a narrow application, right? Approach. So it has to be designed like that since the very, very beginning. And so that is the first thing I saw. So that told me that there would be more, if you like, attempts than capability to real scale because of that constraint. And we saw it in the market, right? That was happening. And on top of that one, we started thinking, what is the real thing that in the end will allow to unlock the capability of the bank to deploy AI enterprise-wide on a variety of different use cases that might not be exactly the same, but what makes them different will not be the way they're applied, but the risk that they generate. So I already started discussing the concept that was 3 years ago. As much as every banker is a risk manager, every banker must be an AI risk manager, which is beyond governance, is really in action. So the question is, how much risk can I bear given the fact that I'm using probabilistic technology that can improve over time, but will always be probabilistic, right? So not deterministic. So there is a gray space where, there can be hallucination, there can be a wrong decision made, right? So I need to understand if I can afford that mistake, and I need to understand how I can remediate that. So I go from risk measurement to risk management here. Now, in the research, you also saw that 66% of CEOs, we surveyed 300 CEOs of financial institutions worldwide, who were asked, would you take substantial risks to get the advantages of AI in terms of automation and competitiveness? 66% of the CEOs said we must take significant risks. Now, they don't say they will, but they realize that they must take it because this is probabilistic, is still growing and changing. So the question is immediate: whom would I ask to get permission to take those risks? The chief risk officer. So what I think that many missed is the link between technology and risk management and the capability to explain that in terms of the allocation of capital. And we started seeing last year this popping up in the industry as well. Of course, we were adamant in having these conversations with our top clients, but I saw it here and there popping up. And one of the nicest conversation I have that I can mention because it's public, I publish a compendium to my research called Advisory Makers every year. And last year in September, we had Nubank joining the research perspective as the second year in a row. And we had a conversation between the chief risk officer and the head of AI strategy and product development. And now Nubank is possibly the largest neobank in the world outside China, maybe the largest bank, 140 million customers. So maybe it would be in India some bigger. But out of China is the largest neobank, twice as much as Revolut. And that's an interesting conversation because they really ask themselves how they can reorganize, right, their operations in a way that risk is an enabler, right, while remaining independent participates to the transformation with AI. And that is where I see the real game changer. So those strategic institutions that are more deliberate in understanding the risk management of AI are those who will be capable of scaling enterprise-wide faster or better than the others. And the understanding is happening now. Amit, you're in mute.
Yeah, amazing. No, that's really insightful. So, Paolo, given that you are actually looking at this space closely and doing so much research, wanted to ask you, like, as a AI venture builder, we are very hyper verticalized AI solutions, especially in financial services, looking at insurance claims process, small business lending, wealth management, RIA space. So similar to this, like, what are you seeing in the banking financial services in terms of the use cases? Where are you seeing most amount of work happening today?
Is changing, and there are three dimensions to it. One, first, most of the banks look primarily inward in the application of AI. That means automating some back office processes or operations looking for extra efficiency. Can be in the classification of documentation or a client onboarding. In this case in particular, we see how AI, as it became more flexible, opened up new opportunities to transform banking. For example, commercial banking, banking for small and medium enterprises. For many years, that was like a forgotten area of the bank, because while in retail banking, you can still classify clients if your AI is not good enough between rich and poor, old and young. In SME banking, you have a variety of businesses, and they're all different. So they have different documentation. So only when generative AI became mainstream, bankers realized that now technology was fit for purpose to transform that part of the business that was highly bespoke, right, with a variety of different differences. But this inward, right, is also a reflection of the fact that not knowing how to risk manage AI, every time AI was touching the client or going out, that was orthogonal to regulation, compliance, and the capability of banks to justify what was happening, and not many wanted to take that risk, right? Not many
Okay.
measure it and manage it. Now we see that given the fact that large language models have improved significantly, not yet perfect, but there's more inclination to look at how to position AI also in the first mile or last mile, according to the way we see it, where there are more touch points. Whether it is augmentation of the relationship managers or sometimes a replication of that for at least the simpler and again less risky cases, but still is one step ahead compared to the rest. So now we see that there is more clear, attitude compared to the past, where there are a lot of use cases, but that the focus more inward. On top of this, the third one is very interesting. In my latest research on core bank modernization, we looked at how AI is used for the transformation of the core, and the point there is everyone will use AI in the development process. Now, more than 50% of CEOs end of last year declared they use it to do coding, and above 90% said by 2028 they will use it, right? So that will go mainstream. Being mainstream is not a competitive advantage. So where does the advantage come from? Where it really comes from on the way you reorganize the operations around AI, as now you are digitalizing knowledge. So it's not the, if you like, automation of a task, which is where everybody is looking at because it's sort of safe in terms of applying it. You don't touch the way human works, you just make them more efficient. So that will be how you modify the way individuals interact with the organization, with the knowledge that is more formalized and distributed through AI. And some CEOs are asking themselves how they can build this asymmetric competitive advantage, right? And so that I find interesting because I think that effectively, in the end, the biggest value will be in reorganizing the way the various functions and people interact among themselves using AI as, if you like, a central point, right, to distribute works, activities, knowledge. That makes agile real agile, right, and shareable. Otherwise, a lot of people said that we're agile here and there, we're agile nowhere because we cannot share those elements of value. Now there may be a platform that enables you to make that value created immediately available to somebody else and understandable. And that is where I believe most of the value will be triggered. And again, will not be for everybody because it requires an intelligent understanding at the core. Okay, it doesn't happen just because the periphery, becomes smarter with AI. It requires a deliberate decision on how the organization has to be redesigned.
Right. No, absolutely. I think we have to make AI easier for especially non-technical users. Skills and workflows have to be shareable. So yeah, a lot of points resonate. Um, from your vantage point, I also wanted to understand, this is the big question in the industry right now, that let's say banks and FIs, when they are looking at from a solutions and products and vendor's perspective, is it more of like, okay, let's give Claude to everyone and let's give these horizontal platforms to everyone, or is it more like let's go with vertical AI solutions, specific solutions for specific tasks?
Well, I think it's both, and there is a tension here because it has happened that people started using like AI for their tasks and productivity, and quite a number of institutions didn't care much about that. Okay, but they were very deliberate in discussing the vertical, which is what is discussed, right? The application. Then they realized that even the horizontal pace, the productivity of people, needs to be governed, right? Cannot be left out. And so you get this tension between the two. You see clearly, for example, Microsoft saying that they asked the quotas not to use, Cloud anymore in their coding process because they were using it too much, right? And so they were not controlling the cost. So they didn't think about, right, all the consequences of this. But even that one is a use case, right? That needs to be governed and managed. And if I can use this one, I guess that one of the elements that people haven't really understood and they need to think about that more carefully, and I know how to think about it more carefully, is economic model around that. When cloud came to the front of the conversation, many got enamored with cloud, but they didn't understand that while cloud is good because costs are variable, so in principle, you consume and pay when you need, not necessarily the revenue are as variable or variable with a higher drift compared to the cost. So through the pandemic, when volumes skyrocketed, everybody was using, but the margins, the revenues were not shifting on digital that is supported by cloud, so out of the branches. So they got higher cost and not enough revenues. And with AI, it's a bit like the same. People have not yet factored inside with sanity the way the various elements will evolve as AI will be used more, okay? Because appetite comes with eating, and the more you eat, the more you like, the more it goes, right? But not necessarily that it's tied directly to the consumption. Now, when you think about your budget, people, and I love people, you know how much you're going to pay in terms of salaries. Typically, there's a downside when you downsize, you don't double the salaries right every year, unfortunately. But you have an idea on how much you will have to spend for that capacity the next year. Now you have AI, and that's sort of unlimited, but it's a limited in the cost as well if you start using it a lot. And when you reach the consumption tokens, it's done. So have you been using that capacity in a way that is tied to the generation of value? Sometimes you just need to use it to learn about it. So it's a bit complicated right at the very beginning. But I think that many were fairly simplistic again, like it happened with cloud and that, and not just the banks, also the big players like Microsoft. And that I find fascinating because I've been promoting the discussion for a while, but I know that things need to happen very fast. And instead, again, you need to work on the foundations if you want to make it right. Otherwise, it falls back.
Right. No, the token maxing or cost management part of it is so important. We had this discussion at our event at Sandalwood recently, and basically, the Uber CTO actually said that we have burned all our tokens in the first few months. The whole budget has been burned out. And when you go to this, like this is still enterprises, when you go to small and medium businesses, they are actually not thinking about token maxing or anything. They are actually thinking about if I have four people, I'm going to replace them with AI. Does the AI cost lesser or more than the cost of these four people, right? So yeah,
But that's fair. The problem is that not necessarily cost less the moment you use it more, but how much revenue can they generate?
exactly. That's
And
how they should be looking at it. Correct.
exactly. So is the application now? Sometimes you don't want just the revenue, right? But if the cost compound, then not necessarily the cost cutting will be occurred, right? The efficiency. So it's a delicate balance, even for a fintech that you, all right, or a more advanced tech player that you need to consider. And things have been shifting so fast, okay, that being a complex topic to be managed, it became even more complex now that things are shifting, almost at the speed of light. So
Right.
let's think at the same time, if you like.
Yeah. Yeah, absolutely. So, as a AI investor and builder, we talk about this a lot that when you are building anything, this was true in the fintech era also, that whenever you are building anything in the revenue path, right? Like you said, like if there's AI which is helping in use cases where you are actually sort of generating more revenue, easier to sell and easier to adopt as well. But then there's a lot of AI solutions which are required in the back end for automation or reducing cost as well. Are they also going to get enough traction, or it will be mostly like let's just grow the revenue?
Well, as I said, that is where banks focus the most in general at the very beginning, right? Here we get interesting. In our research, we saw that the vast majority were looking at optimizing processes like KYC, anti-money laundering, which is typically expensive for the banks in terms of compliance, and why, if you can make it like simpler in terms of management of that process, but accurate, why not? At the same time, if you looked at the Nubank strategy, they focus more. They released it a few weeks ago on credit risk management. Why? Because they are expanding internationally. They're moving out of Brazil into the US. They got the banking license. The client base will be different. So they want to get the comfort to be aggressive in the market to expand, right? But doing it the right way. And that makes it very different, right? So you really see the mindset from growing versus optimizing. And it doesn't mean that they don't want to optimize their processes. They might do it as well, right? But effectively, I already see this shift, and other institutions instead are in between. But the vast majority of banks thought about how I can optimize my processes, which are also a bit more free from the business discussion because it doesn't change the way the client is engaged or pays for the services, which also requires an understanding of how the value is generated and shared among the various individuals inside the organization. So that's also a reason maybe for that to have happened, because still it's a business and technology discussion that goes hand in hand, but we know that in many cases still the two hands are attached to two different arms.
Yeah, no, very well said. And Paulo, you know that we grew up in the fintech world, and I think you wrote a lot about not just in the books, but also in other places as well about banks and fintech collaboration and the platform economy. Does AI change any of that? Does AI change the equation or the structure that has developed over the last 10 years?
It does. And the reason is because in most of these cases, it's about connecting capabilities that you've been building, very specialized, or through APIs into a bigger world. And now, those capabilities are more at the reach of anyone to be built because with code, right, you can do a lot of stuff. So this software as a service space, which is where there is a lot of connections, right, in the embedded finance or open banking, is going to be transformed because of that, right? And that also means that maybe now banks will be more inclined also to make that transformation from the inside because the barrier to get that done, okay, is lower. Because say that not all of the fintech were there to become unicorn and transform the world completely, right? Some of them were really trying to optimize this process, that process, and there is as they did with the competence, I can help them to do that while me implementing internally. So now I sense that it will be easier for banks to have those resources inside that are capable of building instead of buying. While in the past they had the problem of having enough resources to build because they needed to have big, as teams with the capability and to deploy. So they might change the convenience yield, okay, between build and buy. And then second, the AI is transforming every business, right? So the fintech as much as the banks, but they might provide to those that are capable of using it as a new engine and operating model more capability to be relevant. So I would not be surprised that some fintech are now capable of doing much more in terms of expansion of the market compared to what they were capable of doing before because AI enables them more, right? To go to the front. So on the one side, I think banks will be more capable of building instead of buying. So that would be like a contraction of the space for connectivity through APIs. But on the other side, some fintech will be capable of running faster compared to the past, supporting a growth which will close the space for banks, right, to stay relevant. So it's like working for.
Yeah. And on that topic, you have actually talked about SME banking, right? SME banking is the place where there will be hardest competition between incumbents and new entrants. And now in the AI world, how does that look like?
Well, so SME banking is where the competition is intensifying across the board. The reason is because, let's say, retail banking is fairly commoditized. There are differences in the US compared to Indonesia, but largely speaking, in all markets, plus and minus inclusion is commoditized. You see it on the products and the margins. And high net worth wealth management is not for every institution. So it's interesting around the world, but very few, will play in that space. So is large corporate. Okay, not all of the institutions can effectively manage all the relationships for large corporate, but commercial banking is everywhere. The small and medium enterprises are more than 60% of the world economy, and in some countries even more than that. So is a fundamental pillar of economic development. The problem is that they are very different. So onboarding a law firm of 10 lawyers is different than onboarding a restaurant chain, right? Or a travel agency. And that means that these processes are very human intense in the back office to perform all of the KYC and the onboarding activities. But that is when the flexibility of generative AI and maybe agentic AI at this point will allow to, from a central space that is driven by technology, a variety of different personas and businesses can be dealt with, at no cost. So that definitely reduces the burden. That's why a lot of banks are going there. But also at the same time, there's a lot of services that these guys want to reach out to access to do their business. And I'm just working on a new research piece that will be released at the beginning of September on corporate banking. And I made that reflection with some of the clients that we took it to. Like when I was a risk manager in the 1990s, there was this idea that large corporate is high glove, okay, very human, relationship oriented business. And while the mid corporate is something that you need to standardize, right? Figure out how to do that because it's so very different. You cannot have experts for everything, right? So create an Excel spreadsheet with a few categories, try to fit them all in. 20 years after, it happens that the large corporate, through technology, can be more self-directed because the CFO of a corporation has people in his team that can self-direct themselves as long as they're given the tool to access it, to access working capital, to do the cash management, move the money. So they don't need to talk to, a highly qualified banker to do that. While most of the people working for a medium enterprise might not have this competence. So these are the people now, they look for relationships. So there is a shift of the relationship focus out of the large, which will be more intermediated by technology before the medium, because that is where they need. Now, of course, banks and fintech have the problem of scalability for those relationships. So how much AI now that delves into communication can help in favoring that shift? And I think this is what people are now realizing. So we have that hybrid of knowledgeable people, but not that qualified, like the CFO of a corporation. So good enough to engage with an AI model, right? But not good enough to do everything by themselves without getting into a conversation, right? Or being supported by something in terms of how they deploy their knowledge to make decisions. That makes this space extremely interesting for me in terms of the mix of human and technology and the application of AI.
Very, very, very well said. The my team gave me this question, and this reminds me of the amazing pasta that I had in Gloria Astoria in Milano. They said, ask Paolo about the bigger problem, which is the spaghetti-like architecture problem in banking and financial services, where already it was like so many products and so many platforms put together. Now, does AI complicate it further, or what does it do?
I want to tell you two things here, preceded by a comment, and no offense for anybody, but there's a difference between spaghetti and noodles. The noodles are entangled, but spaghetti are also good, okay? Sorry for everybody else. Now, the first consideration, what is technical debt, which is well represented by spaghetti architectures where you don't know how to, move around. Technical debt is not the architecture, the infrastructure, right? Spaghetti is a technical debt is the fact that the monolithic code that maybe was done in COBOL lost causality because monolithic code embeds business logic. But the business logic was like one line of code, 10 lines of code, 100 lines of code, 1,000, 1 million, 10 million, 1 billion, right? And even the guy who wrote that forgot the capability to understand why did that or why didn't do that. So they can minimize the complexity. And most of these people now are leaving the organization because of age, and transferring the knowledge is the knowledge management for that is complicated. So now what happens with AI is that effectively AI can enable you to not just translate code, but extract the business logic, okay, to position it into a layer of AI where you can then access it differently. But the point is that you risk, if you're not cautious here, of position it into another layer, which is highly complex because it requires a high level of expertise to manage AI, where you build your technical debt that you cannot manage. That's why I said is the deliberate understanding of how you can manage that digitization of knowledge that AI allows you to, that will allow you to shift on an AI platform, an orchestration layer, by retaining the capability to manage complexity, so by effectively lowering the technical debt. Otherwise, you risk of adding a layer on top of a layer that you cannot manage together with the previous layer, right? And it becomes another spaghetti. So there is a deliberate decision about the culture and the competencies and the organization around that, that in this case, the CIO has to make effectively, right? So that is the thing. But on top of this, we were very clear in our IBM research to say that if your business is very complex, because the complexity of the architecture sometimes is not just a wanted from CIOs that were not capable of building it clean. It's just that the business, runs very fast. They need to create new ideas, and that the CIO needs to embed them into the system, right? Sort of the speed of light, and there's never time to upgrade the system the right way. So if your business is very complex and you accelerate your capability to develop, you risk to reach the event horizon, because then you add complexity because your business is complex and you power it up to be even faster to build complexity. So the most complex thing here that the real want to be resolved is to how to simplify the business. So in my literature, when I worked on the theory of financial market transparency, there was also about what is that level of simplification that there's transparency in a way that you can afford to move on without building complexity, without building cost. Let me be very provocative here. Sometimes complexity is also associated with rules of compliance that need to be represented in the system. Now, what is compliance? Compliance is not a cost. Compliance is the production process of a bank. Of course, it's a cost because it's the production process. Now, if it costs Apple too much to build an iPhone, they cannot sell it for 1,000 euros. They need to produce it differently to sell it for 1,000 euros, right? If it costs too much, the compliance of a bank is because the product is not correct. So you need to simplify in a way that you reduce the compliance burden. So the strategy around that is very different. But that requires business deliberation to reduce complexity that allows technology to move forward by lowering the burden, right? As they have to transform while they need to manage the existing. And I don't find that conversation is sufficiently spread out across the players in the industry. Instead, is the most important one from a CEO perspective.
Right. Yeah. And also, especially about context graph, like technically, we have seen building AI solutions that unless you are actually mapping everything on a knowledge graph, both in terms of sessions, people, processes, things that you're doing, it gets very complicated. Actually, this is, Paolo, my last question that AI is moving so fast.
Okay.
And is there enough discussion about responsible AI governance? And I would also, like, we were just chatting before this pod started about your book. I think you touch upon this. We would also love to know about what is this new book? What are you talking about it?
So my literature has always been a research process into the foundations of financial services, but they lead into the representation of conscious banking, so the transparent advisory platform of my latest book, Banks and Fintech on Platform Economies. And now I decided that I wanted to deal with the most complex issue of all in terms of AI transformation. So the relationship between human values and AI in terms of consciousness. So can AI be conscious, right? Can AI be sentient? What about human, interacting with the machine? And so I don't want to read too much, but soon will be available everywhere on Amazon. But that is a no PhD required, a deep dive into science, technology, and philosophy to understand the balance and the gap between AI and human consciousness.
Love that. I would I would love to have a signed copy by you, Paolo, when it is out, and we'll make that happen. So great. Thank you so much, Paolo, for your time and some amazing insights. I'm sure audience would love it. And yeah, thank you. Thanks a lot.